Welcome to the Market Recap, your weekly digest of the biggest market stories from the past week. Join host Anna Serin and financial expert Bruce Campbell as they go beyond the headlines to deliver cutting-edge insights into news that move the market. Proudly presented by the Canadian Securities Exchange.
Hi, my name's Anna Serin, and I'm Director of Listings Development with the Canadian Securities Exchange. You're joining us for yet another market recap on Friday, October 14th. I am once again joined by Jordan Youl with StoneCastle Investment Management. Thank you for joining me, Jordan.
Yeah, thanks for having me. It's good to be back.
Okay, I do have to point out, although all Canadians are probably talking about this right now, it is October 14th and it is glorious outside. Is it beautiful in Kelowna?
Yeah, absolutely. It's been, mid-20s, just consistently. We haven't had a lot of rain in quite some time. So yeah, taking advantage of it for sure.
It's amazing. There's some water restrictions, but get out there and enjoy the warmth. All right, let's dive right into it. We're going to talk today about market overview. You're going to tell us what's been happening over the past week, since we saw you last week as well. We're going to talk about the CPI data that came out, which is very important to us all right now because this is the reflection of what's going on with inflation. We're going to talk about small and mid caps. They're on the rise. I like the sound of this. And of course, we're going to end off with CSE issuer news. So let's talk about the markets. What happened over the past 7 days?
Yeah, well, sound like a little bit of a broken record here. Currently the markets effectively are going to have another, down week, unfortunately, despite having, one of the bigger intraday reversals we've seen on record yesterday on Thursday, after the CPI number that came out, the futures, the markets gapped down. We had a massive intraday recovery. Haven't seen that too often. In fact, it's only happened about 5 times in the history of the S&P 500. So it was definitely a rare event. But, despite, having a very strong positive day yesterday, we're having very little follow through today, which is a little bit of a concern.
Uh-oh. And the one thing that you had mentioned, you were talking about some short coverings as part of this process. I just thought it might be good for our issuers to understand, most investors don't typically do shorting. That's more sophisticated move. Shorting is obviously when you are selling a stock that you don't essentially have. And typically, or almost always, you would do this if you think that the stock is going to go down. So you sell a stock at $50. If it goes down to 40, you buy it back at 40. You've essentially made $10. So it's just a type of trading. But why don't you explain to us what short covering is and why it can affect the market so greatly?
Yeah, exactly. So effectively, you're lending the stock or borrowing the stock to bet that the stock is going to go down, and then you cover. We saw, quite a bit of elevated short interest on the market, and a majority of the major issuers in, the common benchmarks, whether the S&P 500 or whatnot. But we do have a chart showing, this longer term S&P chart going back to the March low of 2020. And what we've done here is we've annotated some of these retracement levels. And in addition to the short covering, because I think going into yesterday, especially with the CPI number, the short interest was quite elevated. So there was definitely some short covering, because investor sentiment continues to be quite pessimistic, whether it's the North American Active Investment Manager Index or the put call ratio remains quite elevated. So we're still in this bear market environment, and it's quite choppy and challenging, but we definitely saw some short covering yesterday. But I think, with the CPI number in particular, that was a factor in the drawdown at the open yesterday. But this chart here is showing that the price continues to remain above that long-term 200-week moving average. And this is a 4-year cycle, and that's very constructive and positive. So the line in the sand in terms of support is around that 35.05, which we undercut a little bit yesterday, but we closed above it, which is constructive. But we see some downside targets around that 31.95. And then on the upside, we have to get through some significant overhead resistance around that 3815 to 3900 for the S&P 500. So there is, some positive signs out there, but also some negative situations that we have to work our way out of for sure. But yeah, without question, we definitely saw some short covering yesterday that contributed to the big rally yesterday.
Right. And just explain to our viewers, just so they really clearly understand, what is a short covering?
Yeah, so effectively what it is that, you are borrowing stock as it goes down, and then you buy it back at a lower price to cover your short.
Right. So it's just the completion of that transaction.
Correct, yeah.
Okay. Okay, let's talk about CPI. Now, the world did not react well the last time CPI data came out, and showed that although the Fed has very aggressively increased rates, that our inflation rate kept going up. It didn't actually do what it was supposed to do. So the markets were very angry about this. What happened this week?
Yeah, so the CPI remains elevated. It came in at 8.2, which is quite high. But really that gives the Fed, the green light to continue hiking or increasing rates aggressively. So we do have a chart of the CME Fed Watcher tool. And what I've done is I've looked out to the December meeting. There's a very high probability, like high 90% chance that they're going to increase by 75 basis points for their November meeting. But what's really changed, for the December meeting is that there's a higher probability now that they're going to increase an additional 75 basis points in December. That wasn't really on the table a month ago. So there could be, an additional 150 basis point hike over the next two FOMC meetings, one in November and one in December. So that is going to continue to potentially cause a headwind for stocks. Obviously, the 10-year Treasury yield today went through 4% today, and that's going to have a negative effect on consumers as well. A big component of that CPI index is housing, and if you look at the U.S. 30-year fixed mortgage rate, 1 year ago today it was around 2.9 to 3%. Well, today it's at 6.9 to almost 7%.
Wow.
Right. So it's a significant jump, right? So that's going to be a challenge for homeowners and tenants that are renting, because you're effectively more of your disposable income is going to go towards an increase in housing cost, right? And especially with renters or tenants, you're typically signing for, a 1 year or 2 year lease. It's not necessarily month to month. So that's going to continue to create a headwind for equities moving forward.
Just remind me. So the CPI came out. It's 8.2% inflation. What was it the last time? Was it 8.4?
It was I believe it was 8.4 or 8.3. I think it was 8.4. The consensus was 8.3, I believe. But either way, it still remains elevated. And we have Canada's CPI number next week as well that we're going to watch.
Great times. So we'll see what comes out with that. But at least it's trending in the right direction. It's not much of a resolve, but it is heading in the right direction, right?
Yeah, to a degree. There's some components that have come down a little bit, but the housing is
rates.
yeah, but housing is the big one, right? We'd like to see that coming down or trending lower, right?
Absolutely. And it scares me a little bit. I think in Canada, we've had such amazing housing and a market that my concern is when these 5-year terms start to come up, how that might affect people, right?
Yeah, absolutely. And I've spent some time on the phone talking to mortgage brokers, and yeah, they're feeling it right now. A lot of investors that have, or not investors per se, homeowners that are on a variable rate, they're feeling that currently. I've talked to mortgage brokers where effectively, these homeowners are, selling one vehicle. Maybe they've originally had two vehicles, but they've gone down to one. And, unless you're getting like a big pay increase or we see some type of trend and increase in wage growth, this inflation is having a lingering effect with your day-to-day spending and housing costs.
Absolutely. Yeah. I mean, I think we all feel it pretty dramatically every time we go to fill our car with gas or go to the grocery store. So, and we're in it for a little while. It'll take a while for this to resolve itself, right?
Yeah, it could take multiple quarters. Like we're just going to have to track the data one by one. But, as a segue, we are seeing opportunities in other areas. We can still pull out return, in this challenging environment right now.
Well, I love to hear that. So let's move on to that topic. So small and mid cap companies are on the rise. What's going on? What are you seeing?
Yeah, so this is starting to get us quite excited. We're an all cap manager, but we tend to deploy our capital and invest in smaller to mid cap companies. And we really haven't seen this trend for about 18 months now. Even if you go back to the March low during COVID in 2020, the market made a big recovery off the lows, predominantly led by the small to mid cap growthier names. That was a fantastic run. Well, that peaked in February of last year. And even though the markets or the equity markets hit all-time highs in January of this year, a lot of stocks were underperforming and breaking down, at the midpoint of 2021. And they continue to be out of favor up until just the last several weeks. So on a relative basis, so when we're comparing the small to mid caps, which have been really out of favor to the large caps, and we compare them to one another, we're starting to see that reacceleration and accumulation back into the small to mid caps that we haven't seen in about 18 months. So I have a relative rotation graph that is illustrating the intermediate term and longer term trend of the small caps and mid caps to the S&P 500. So how it works is there's 4 quadrants: improving, leading, weakening, and lagging. And typically the constituents within these relative rotation graphs rotate in a clockwise fashion. So the chart on the left-hand side is a weekly chart. So it's an intermediate term time frame. And each white dot within those squiggly lines represents 1 week. And you can see that the small caps and the mid caps are moving in a north-northeast direction within the leading quadrant compared to the S&P 500. So that's indicating that the underlying momentum and relative strength is building in a positive way compared to large caps. The RRG, or relative rotation graph, on the right-hand side is the longer term, and that's a monthly data set of the small and mid caps compared to the S&P 500. And you can see this month the mid caps have rotated into the leading quadrant, and the small caps, which have been weak for multiple quarters now, are starting to move in a northeast direction within the weakening quadrant, approaching the leading quadrant. So the takeaway here is that every couple of years the market leadership changes, and effectively we have leadership in the large caps, and then they give up leadership, and we see a reacceleration back into the small caps and mid caps. And the last time we saw this was in the COVID low in 2020 to the peak of last year. Prior to that was in 16 and 17. And then prior to that was in 13 and 14. So we go through these 18 to 24 month cycles, always for different reasons. The macro environment and the narrative is always different. But we typically see these trends shift in leadership every 18 months or so. So we believe as an investor, moving forward, if you have a longer term time horizon, you want to be maybe looking at the small to mid caps, which have been really beaten up and out of favor for the last 18 months or so.
That's interesting because it feels counterintuitive to me, because typically there's a little bit more risk that you would take on with the small to mid caps. So if the big senior companies with the big market caps are not doing well, and we've seen some big ones really struggle, it seems counterintuitive that you would see kind of capital flowing to the small and mid cap. But you're saying it doesn't really matter what's going on in the macro. Typically that'll vary whatever is going on there, but that there is this kind of cycle within its own on the small to mid cap. Is that right?
It is. And, you typically make the biggest gains off the move, but, you and I both know investors will not really take advantage of this until many months after the fact when everything's positive and wonderful. But, we're starting to see, if you look at the advance versus decline issue, so the number of stocks that are advancing versus declining in the small to mid caps is growing.
Yeah.
Right. So it just really, following the tape and just looking at the money flow and just looking at, what has the strongest relative strength. We're not saying it's going to be not volatile because we're in a very choppy market currently, but we think there's a lot of attractive value right now in the small to mid cap space, which has been really out of favor for the last 18 months or so.
Which is also why you get professional advice, especially in markets like these. So anyway, well, that's good news, and hopefully we continue to see that. We're going to finish off with some CSE issuer news. We're going to talk about a sector we haven't talked about in a little while. Our issuer GameLance announced a non-brokered private placement of debenture units in the amount of $15 million. So this is obviously in the gaming space, in the e-gaming space. We haven't talked about this sector in a long time. So congratulations to GameLancer. That is a massive raise. You know, when we go through kind of our weekly press releases and see what our issuers are doing, you don't see this numbers often. So I was a little surprised to see it in the space. And these guys they're huge. They acquired by Wonder Gaming. GameLancer Media Corp is a media and entertainment company providing creative and curated content to the world's largest brands and media agencies. They are generating 1.7 billion monthly views across their 27 channels and has over 32 million followers on TikTok. I do not have that many. Instagram and Snapchat. Prominently located in the US, Canada, and the UK. So these are big guys in the gaming space. So it makes sense that they were able to go out and raise that kind of capital, no matter what the markets are. But I was curious what you are thinking about the e-gaming space. I feel like we haven't talked about it in a while. It's not been, you know, we're finally talking about cannabis again. But what do you guys think about the e-gaming space?
It's definitely a growing segment. You and I spoke about Fans Unite and a few others about 18 months ago. But yeah, you know, we're seeing more, you know, appetite in the sector for sure. You know, just watching, you know, Sports Center and whatnot, they have the odds with the betting and whatnot in the gaming space. So, you know, in terms of the viewers, like it's fantastic. And, you know, this is not just like a domestic opportunity. It's a massive growth area. So it's definitely exciting for sure. But yeah, it kind of reminds me of the cannabis sector a few years ago, right? You know, a lot of build up anticipation, projections and whatnot. So we'll see some follow through, but yeah, congratulations on this raise for this CSE issuer for sure.
Well, I think it becomes one of those things that the e-gaming space is becoming something that might endure any market fluctuation, because people are going to sit at home and, you know, follow people on Instagram, and they're going to play their video games, and they're going to be a part of kind of this social movements that's happening no matter what's going on in the markets, maybe even more so when the economy is down a bit. So congratulations, like you said, to them. All right, Jordan, what do we think about going into next week? You did mention the Canadian CPI data will be coming out, so we will be waiting for that. What day does it come out next week?
I believe it's Tuesday next week. Yeah, it's mid next week for sure. So we're watching that definitely. I think what's going to be bigger in terms of what's going to drive the market is the US LEI index released by the Conference Board Index. That's going to be on Thursday. And we've had 5 or 6 consecutive months where the leading economic data has been negative. And we spoke about this, I think, recently, but there's more recessionary warning signs that are being triggered that we haven't seen in quite some time. So the LEI index on Thursday is really, you know, important for the market to see what's really driving the economy, to see if we kind of shift gears and, you know, turn this thing around. So that's obviously on Thursday. We have corporate earnings as well, which will pay close attention to. But at the end of the day, we just want this market to kind of like stabilize somewhat and see if we can, you know, hold that 3,500 on the S&P and break out here. We're going into a stronger seasonal period as well. So I touched on this last week, but Q4 typically is a positive quarter for the equity markets. We typically get, you know, a Q4 tailwind, and then even in a midterm election year, which we're in, the returns are above average as well. So we'll get some follow through hopefully, and finish up the year on a positive note. But that's what we're really going to be looking at for next week and between now and the end of the year.
And it's also supposed to still be gorgeous outside. So nothing bad to look at in that regard. Listen, Jordan, it's always great to chat with you. I'm glad I got to see you for a second week in a row. I hope you have a wonderful weekend, and we'll talk to you soon.
Yeah, thanks for having me. Same to you.
Thanks.